All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic, because in today's video, what we're going to be doing, as you can see, we have a lot of tabs up. We're going through my real life portfolio. This is going to be a portfolio dive for the start of November. This video is actually brought to you guys by a current subscriber. His name is Victor Wolfie8333. He's been a subscriber for a very long time. I know this for a fact. He always comments, "Thank you, Mr. Victor Wolfie, and I respect you. And the reason I'm creating this video is because of you." He said, "I don't think we've seen a portfolio kind of overview in a while. You should show us your progress and tell us what you plan to buy in November." Smiley face. Hey, you know what? I'm smiling back because, Victor, I'm going to make this video for you, and I'm going to make this video for everyone and the person who just unsubscribed from me. That's all good. Please do subscribe. We're up to 3,256 subscribers. Crossed over that 3,250 subscriber marker, which is awesome. As I mentioned in this video, we're going over my portfolio. I'm not going to hide a single thing from you guys. I'm going to be as straight up as possible. I'm not sure, this might be a little bit of a longer video just because I want to show you guys exactly how each of my worst and my best performing stocks are doing, and I'm going to be extremely clear in this video. So without further ado, our portfolio is down 32.83%. This is not necessarily all true just due to the fact that we are reinvesting a lot of our dividends, and kind of a percent of this percent return has also gone into our reinvested dividends, which I don't necessarily count. I count that as cash flow. I don't count that as my own personal money invested. But currently on our portfolio, we're sitting at about 22.6% of yield on cost. Our November income's coming in at roughly $150 US, and this is my portfolio. We have some really big losers in the portfolio. I can't lie. We have ZIM coming in at 73%, WBA at negative 50%, negative 45 for ZIM, negative 30 for 3M, TSLY, and the list kind of goes on. Our best performing stock is Energy Transfer with about a 12% gain over the past little while, and what we're going to do is go into all that. One thing as well is KLIP paid us their dividend, and look at this, it paid it on October 31st. KLIP, I actually made a video not too long ago about KLIP and their dividend, what I thought it was going to be, my investment strategy on KLIP, as you can see right here. And I was kind of bashing ZIM. I was bashing KLIP because I didn't think they were going to pay this dividend on time. They normally don't, but they did here, paying it on October 31st, which is what they said they were going to do. So that is awesome right there. I will probably put this dividend into TSLY because TSLY's ex-dividends coming up pretty shortly, and I still do think it's at a pretty attractive price, which I'd love to put my dividends in. So that answers the question of what I'm going to buy in November. That is the only thing I'm currently planning on buying right now, but what we're going to do is we're going to look over my portfolio. Now, for most of you guys that are aware, over the past 6 months, or even 3 months for that matter, major indexes like the Dow Jones and the S&P 500 have obviously taken a pretty big hit. We're looking at a hit about maybe 10 to 15% respectively. And so obviously when the major indexes go down, our underlying stocks get hit pretty hard. Now, certain stocks get hit harder than others. TSLY, I'm sure you guys, we have many investors who invest in TSLY. You guys have all known what TSLY did in the past month. It was trading at about $14 over October, and then recently fell all the way down to $11 here in the end of October. Now, TSLY sitting at about $11.10. This puts my position on TSLY at negative 23%. I'm still receiving that dividend, so all is well there, but TSLY has had a pretty deep dive and a pretty downward trajectory just due to the fact that Tesla, the underlying stock, has also gone down pretty hard. Now, what I want to do here is I want to show you guys my worst players. ZIM is one of my worst players, but I still love the company ZIM. Nothing has changed with ZIM. ZIM is ZIM Integrated Shipping, ticker symbol ZIM. It was up at a stock price at about $80 at one point. This is when they were paying out massive dividends. We're going back and we're looking here. Dividends that were about $6, $2. They even paid a $17 dividend at one time. Now their last dividend is $6.40 and their current share price is $7.88. We'd probably never see that right now, but if ZIM is able to become profitable once again as they once were, this is a stock that I'm really glad to be holding. Now, I know ZIM over the past year has really gone down, and my portfolio has definitely felt that. I'm down $550 on this position. I'm currently not adding any more to ZIM, just due to the fact that in their financials, I need to see that they're going to be profitable over the next quarter. But the numbers aren't that crazy. They were down $215 million over the past little while, but on their balance sheet, you could see they have a lot of cash on hand, which they could use to potentially kind of waiver these times in the shipping industry as shipping's kind of going through a little bit of a recession. But if ZIM can come out of it on the other side and be profitable, that is going to be a big win for ZIM and investors. Now, my next stock I want to talk to you guys about is 3M. I have a lot of companies in here, and 3M is another big loser of mine. It's down 30%, but 3M nothing has really changed with 3M. I still love 3M. 3M over the past year and the past little while, you can see has gone down from $200 all the way down to $90, literally a 50% drop. Over the long-term price action of 3M has trended upwards. It's going through a recent bad time just due to the fact that they did have a kind of earplug lawsuit. And so that put a lot of pressure on the company. You can go here into their financials and you can see that they actually reported big losses to their net income in the last year, and then also this year, or sorry, these are their quarters, sorry, the last quarter and their second last quarter, just due to the fact that they did have to pay out some money to their lawsuits. But you can see their total revenue, nothing has really changed with 3M. They're just kind of sticking through this period. They have more than enough cash that they're making to cover their dividend. I'm not necessarily too concerned about the dividend because it's not too much, but what I do want to see is they're still bringing in good amounts of operating income, and their free cash flow is covering their dividend, which is great to see by a good margin. So I am holding 3M. I'm not going to sell it. Same thing with Walgreens Boots Alliance. This is a stock that I'm down 50% on. Walgreens Boots Alliance. They are a pharmaceutical company. I bought this a long time ago. Over the past year, same thing, trended downwards. And this is kind of what I'm saying as well. So even though the Dow Jones has kind of had a rough period and we're going through kind of like a flat phase with the Dow Jones and with the S&P 500, it's some underlying stocks are getting hit pretty hard, like 3M and like Walgreens. And even though we're not technically in a recession, some stocks are definitely going through what I would call a current recession, just due to the fact that they've been trending so far down for so long. And there's really kind of no bottom in sight at the current moment. This could present good buying opportunities for the long term if you're interested in Walgreens or 3M. Obviously, I don't say to invest in them, but what I'm saying is these stocks have been hit pretty hard, and I think they've been hit harder than really they should have been. Now, the next stock I want to talk to you guys is MPW. MPW is down negative 46% in my portfolio. You can see a real trend here. Negative 40s, negative 40s, negative 50s, negative 70s in my portfolio. MPW was actually trading at a good marker. I was up for a decent amount of time here on MPW when they were trading at about $10.24. Then obviously over the past little while and over the past month, they've traded down to the $4 marker. I think this is a pretty insane level for MPW. There's a massive kind of short interest around the stock. As you can see here, short float is 30% and 21% of shares outstanding are shorted or are basically being shorted. I think this market cap of under $3 billion is very wild, just due to the fact that even just looking at their balance sheet, their assets to liabilities, total assets of almost $20 billion, we'll call it $19.5 billion to $11 billion. That's about an $8 billion gap. And so obviously, if they were to just liquidate everything, they'd definitely be at a larger market cap. And I do think they're worth a lot more than they're currently valued at. But obviously, there's a lot of negative sentiment around MPW. Their last quarter earnings actually came out much better than expected, which is great for investors. They have companies paying them back. They were profitable by $100 million, which is great to see. And so if MPW can kind of keep this going, I think long term they're going to be totally fine. Now, jumping into actually a good stock in my portfolio. Is there any good stocks in my portfolio? Obviously, we have QQQY, which just announced their dividend today of $1. I'll probably make a video on that later, but EPR is one that we're up a couple percent on. One stock that's actually coming back in my portfolio is AT&T, down about 20% on AT&T. So going over the past month here, you can see AT&T is actually making a bit of a comeback here from $14.22 all the way back up to $15.63, so $15.50. And this is a stock that I bought a long time ago. It's a tech giant, over $100 billion. They've been through some rough times with their kind of earnings not being as well as they'd like, but they're slowly coming back, just like 3M and just like Walgreens as well. And so AT&T is one to watch out for. I think they will return to their previous levels and then go back through this $20 level here. They did actually cut, I'm pretty sure AT&T cut their dividend not too long ago. That was when they did the whole split with Disney and made them two kind of separate companies. So AT&T is its own company now, just the telecom business. But I do think that eventually they'll get back to these $20 levels when they kind of get out of this slow phase right here. Now, the last and really my kind of best kind of investment here is Energy Transfer. I'm up 12%. I don't really have much money in the stock. As you can see, I put in only about $175 US into this company, but it's performed pretty well for me. This is a high paying dividend stock. It pays a dividend of 9.5%. I probably have it at a better level, about 11 to 13% is going to be mine. It's been a company that's appreciated a bit over time. Going to the long-term history, it's had some massive drops, going from $30 here all the way down to $7, but I was able to pick it up at a decent price, about $11. And over the past year, it has done pretty well for me, as you can see, going up to about $14 or so, and then right now it's hovering at about $13.19. So that is kind of an overview of my biggest losers and some of my winners in my portfolio. Going to my payout calendar, you can see here, this is just kind of like my projected dividends for over the next year. November coming in at $154. You can see I have a bunch of high paying dividend stocks in my portfolio. I'm expected to get a dividend actually today from AT&T, which is going to be very exciting, which I'll probably reinvest back into TSLY. I have no dividends coming in for the next week, but then I have a bunch of dividends on the next week on the 14th and the 15th going into TSLY, Stag, EPR. I'll receive one from Energy Transfer, one of my best stocks. I'll receive that monthly dividend from TSLY, and then finally about a $70 dividend from KLIP or so, which I will definitely look to increase as I reinvest these dividends. Guys, in my portfolio, even though I'm down a lot, I'm not necessarily concerned. I invest for dividends. I invest for cash flow. I'm looking to get my monthly income up so I can potentially buy some amazing companies in the future. It's difficult to invest when the stock market is kind of trending sideways or going down. It's difficult to say what stocks are going to do in the future. I'm no stock absolute expert. I'm just here providing my opinion. I think over the next little while, stocks are going to continue kind of this bumpy, rough phase where they're kind of unsure on where they want to go. They're going to trend sideways like they have for the past little while, just due to the fact that we had really high inflation, and we still kind of do. But as long as you're reinvesting your dividends and you're investing for the long term, my portfolio is still in an uptrend, just due to the fact that I am reinvesting my dividends and I am keeping on top of my portfolio. So with all that being said, do I have any goals for my portfolio going over? I'd love to get this portfolio monthly income up to $170 for the next month. We can see this annual income above $2,000 for the next month. That is going to be my goal, investing my money and my dividends. I hope you guys did enjoy this video. I hope you guys kind of got a sense of where my portfolio is at. Maybe it's something similar to yours, just due to the fact that kind of we've all been hit decently hard. I know as well CLM is a stock that got hit pretty hard, just due to the fact that stocks have been trading sideways to downwards in the past little while. But I hope you guys did enjoy this video, got a sense of where everything's at. I hope you guys do subscribe. We're up to 3,256 subscribers, 480 subscribers in the last 28 days. Our last video is doing pretty well, 1.7 views, 7K views. So I want to say thank you guys for watching. I hope you guys enjoyed, and I will see you guys in the next one.